Hi, llewellyn-davies, author, speaker, founder of BGI and Strategy on a Page, and the Strategy Man. That's what I'm known for, strategy and strategy on a page. Now today, in this blog, we're going to be talking about raising capital. Very hot topic at the moment. I want to dispel a load of myths over the next few blogs. We're going to take this apart over a few weeks, actually, because this is an important subject, and there's a lot of myths around this. Let's dispel a few, okay? So, if you want to raise capital out there, the first reason is for what, okay? So, and where do you go for it? Because a lot of people go to the wrong places. So let's start with the first question. What are you raising the money for? Earlier today, I did a masterclass, this is a class we do with 12 businesses one-on-one. We went deep on this because 6 people in the room said, "Oh, I want to raise money, Derry. They wanted to raise cash." And I said, "What for?" "Oh, well, I just don't think, I could do with an extra bit of cash here." No, not the right answer. You need to be very, very specific for what you raise your money for. It's not just, and by the way, people who say, "I want 100 grand, I want 10 grand, I want 1 million, that's woo-woo number. You haven't thought it through. Dare come to me and say you want to raise a round number unless you're very clear on what you want to raise it for. So what do you want to raise the money for? And that will depend the source you go for it. And also, what kind of size of business are you and what's the amount of money? So take you on a little journey from startup, incubator, right the way up to multi-million pound business. Along that route, you're going to need different levels of finance for different things. Now, at the beginning of the journey, it starts off with, guess what? Friends and family. People use credit card. Now, don't advocate loads of debt and credit cards. There's a lot of other people preaching that on the circuit, and I don't agree with it, but it's actually quite true. This is how I started off, putting personal bank loans and debt and all the rest of it. Because, by the way, down there, when you're a startup, you're not going to get the bank finance and all the rest of it. It's not what it's there for. You might have a bit of grant funding if you're young there. That's the kind of areas down there. As you move through the journey and you get a little bit more sophisticated or a little bit bigger and a bit more of established business, bank financing may come into play. We're going to talk about bank financing next, actually. The other thing in that journey is angel financing. Angel financing is brilliant and hot at the moment. We talk about some tax schemes and stuff around that, which is encouraging the angels to invest. Very exciting times for all of this. But then as you grow bigger and bigger, now, if you're wanting to raise 10 grand, 100 grand, a couple of 100 grand, that's all kind of in the bank realms, all in angel realms. As soon as you get up to about 500,000 plus, things have changed recently in the last 5 years. It used to be a lot more. As soon as you get above that, you're still in bank territory, but you're in different bank territory, different bank managers, right? So you're in corporate managers then with banks. As soon as you get over about 500,000, £1 million, still there, acquisition financing, asset financing, all interesting areas, different source. But now you move into venture capital territory as well. This is the much bigger stuff. VCs typically don't get out of bed for less than about £1 million, although they've come down a little bit over. I've seen some VCs putting around about $500,000, which has been interesting, as they start to share the risk a little bit more with other venture capitalists. And then you're also into private equity money up there, family fund money and all that kind of stuff. So there's a whole spectrum. Now, understand the different sources. If you go to the wrong source at the wrong time in your journey, you won't get the money. So let's dispel away. People are saying, "Oh, there's no money out there at the moment." Yes, there is. There's lots of it. Now, we're sitting in February at the moment, and I've raised about 1.4 million for businesses already in bank finance alone. Now, that's interesting. Don't tell me there's finance out there. The angels are out in force. Venture capitalists are starting to come back in play. Money's out there. But here's the thing. They're lending money to good companies with strategy and numbers. We're going to go a little bit harder there when we go into the banks in the next blog. So I want you to think now. Do you want to raise capital? If so, how much and for what? The more specific you are, the better. You need your numbers. You've have to have a profit and loss, balance sheet and cash flow. And if you don't know what they are, we're going to have a whole series around the whole finances because this is the weakest area. You've got to know what you're raising your money for, okay? Think, what am I raising my money for? How much? And where on that spectrum from friends and family and credit cards and cash and all that kind of stuff, right up to venture capital, where are you on that territory? And then I'm going to help you. Over the next few blogs, we're going to go into the different areas and understand the differences between them. So I'll see you in the next blog. Think about that, and the next time we're going to cover bank financing.